Now, Tamboran is the latest Australian-based company to join the NYSE. Overall, 6 companies from down under are listed here at the exchange, including fellow energy companies like BHP and Woodside Energy. Collectively, the 6 companies have a combined market cap of about $215 billion. Joining me now to discuss this and more is John Love, the CEO of USFC Investments. Hello, good afternoon. Thank you for joining us.
Thank you for having me.
It's great to have you. And again, thank you for joining us. But let's get into this a little bit more. So what would you say investors are looking at most closely when it comes to companies operating in the natural gas industry?
Well, these days they're looking for companies with strong margins, obviously strong balance sheets, with fiscal responsibility. As you know, in the previous decade, there was a real drive to drill as much as possible, produce as much as possible, and that led to some sloppy balance sheets. In this decade, especially after COVID, companies have improved their flows, cash flow, dividends to investors, and I think investors have been a lot happier with what they've seen from E&Ps and from drillers and that kind of thing. So they're looking for these days fiscal responsibility, not drilling anymore.
And where do you believe natural gas and oil is headed during the second half of 2024?
Oil's interesting because we've been kind of in this space between $70 and $90 and really kind of went along the median of $80, which is where we are right now in terms of U.S. crude. There's one key factor that is keeping prices there, and that's OPEC right now. They're doing a very good job of managing their output and preventing supply from getting too large relative to demand. So there's really kind of an OPEC put, the same way there's a Fed put in the U.S. With interest rates and with the market overall. OPEC is really keeping a floor on prices. Where there is some uncertainty, of course, is all of the everything going on in the Middle East, geopolitical instability all over the world. There's really nothing that would stop if there were to be an outbreak of some kind or intensifying of hostilities somewhere in the Middle East. Iran stopping tankers in the Strait of Hormuz again, like they did back in 2019. You could have some serious upside to crude oil. So I think we're probably range bound as long as OPEC is committed, as they have been for the last 2 years. But we'll see how they continue to manage that and as the years go by. So I think the rest of the year, I would say oil is probably looking pretty healthy.
And your firm, USCF Investments, has a wide range of exchange-traded products and exchange-traded funds encompassing the energy sector. So what commodities are seeing the most demand from investors right now, and why?
We've always had good demand in our oil and natural gas products. We're actually seeing a lot of increased demand we have a copper fund, CPER, which we've been telling investors that when you're looking at energy and looking towards the future, you really have to start thinking about some of these industrial metals as part of the energy story. We have a copper fund, an aluminum fund, and we're seeing a lot of attention there because copper is critical for the energy transition. It's all of the wiring within an electric vehicle and in power stations and things like that are super dependent on copper. So we're seeing a lot of attention there. We're seeing attention to our midstream energy fund, which has done quite well, and our broad commodity strategy, which gives you exposure to things besides just oil and natural gas, but also everything else out there that has different drivers. We're trying to find. We've got a system that tries to find the best story in commodities in a way, and I think if you look at the numbers, it's done that successfully, and people are starting to notice that.
A lot of key takeaways there. Thank you so much for joining us.
Thank you for having me. Have a great afternoon.